So Tim, let's start off generally in terms of the macro environment for restructurings, for bankruptcies, for reorganizations. What is it like right now?
Well, the market has slowed down considerably, and that has really been brought on more by the liquidity in the market than companies actually fixing themselves. Some companies have fixed themselves, but for the most part, what you're seeing is a very, very robust high-yield market, and now a very, very robust leveraged loan market. And that has allowed a lot of companies that were otherwise heading into a restructure to finance themselves into another time, either through an amend and extend, which is where you extend your maturity,
right,
or through an actual new financing, which would have longer maturity.
In your view, is that just kicking the can down the road so that in a couple of years from now, we're going to see the need for a lot of reorganizations, for bankruptcies and so on?
Well, of course, I would love that, but it'll depend company to company. Some companies needed time for the economy to recover, and so those companies will actually be, I think, forever healed.
Such as who, specifically?
I think anybody that's for instance, if you're in anything related to the auto industry with sales coming back, you're starting to see a big improvement in auto sales and then for related auto sales. So there's a good example. But there are lots of businesses that just needed the time to let the economy recover. If the economy is recovering, their sales are going up. If their sales are going up, then you won't see the restructure that they otherwise would have had to go through.
You guys had a great chart in your investor day for 2010, and it looked at the high yield market and when it peaks, and then what happens typically, I think, 3 to 5 years after, in terms of the need for restructurings. I mean, so do you anticipate, though, that we're maybe a few years off from a real need, which I know will be good for you guys, but a real need for major restructurings?
I'm always conflicted with that question because I'd rather that, obviously, for the firm, it's better for the firm to have the market be robust. It is a pretty standard system. If you look about 3 years beyond each high yield, each year, depending on what happened in the high yield market in that year, you can look forward and see about what's going to happen in the default area, therefore the restructure market. And I think you could see the same thing again. Some people would say, well, a lot of these are refinancings and these are companies that it's not a new deal, it's an old deal that's being repaired, so maybe it won't be quite the same way. But I think when you see the extreme amount of high yield being issued today, we will definitely see something 3 years, 5 years, somewhere down that road.
Will it be a sector, an industry, or will it just be company specific, you think?
It's a combination. Usually when a company is in trouble, very often, I shouldn't say usually and often, it's one or the other. The industry is often also in trouble because that company is sort of not a standalone causing its own issues. There are companies that cause their own issues and get in trouble. But usually if you see one company get in trouble, then you'll see a bunch of other companies in that industry.
Is there any industry you're watching really closely right now that you think is maybe on the edge a little bit here?
No, I think there's some laggards maybe. We still see a fair amount in media, for instance, some in energy, places like that.
I want to talk to you a little bit too about the municipal market and the government side of things, because we talk so much about the state of our states at this point, and it doesn't look very good. I mean, do you anticipate that we're going to see significant problems in the municipal area and potentially bankruptcies?
It's the hot topic.
Does that make it a no then?
Yeah, no, it doesn't make it
talking
anything.
About.
I think, first of all, states don't have the ability to file for Chapter 11 or Chapter 9.
Could that change that?
Well, it's a question that a lot of people are talking about. Right. And the issue is it's states' rights versus federal. And most people think it won't happen because bankruptcy is a federal statute. And the thought that the states would give themselves up to the federal government, if you will, would seem unlikely. There are a lot of states that have some very big issues. And when you look at what we've done with corporations, a lot of corporations go into bankruptcy for a very short amount of time, and they are healed of whatever their issues are. If you take a company that is in the retail business and they have 500 stores and 250 of those stores aren't needed, you go into bankruptcy, you reject those contracts, you come out of bankruptcy the right number of stores. You asked about airlines before we went on the air, and that's a great example where they were able to reject a number of contracts that they didn't need. So there are benefits to bankruptcy. I don't see that happening at the state level. You could see that in some of the cities.
You could see it.
You could. I don't think that's anybody's desire, and I think that
it's not a good thing. You think it's not a good route?
I think that there's with Blackstone,
because it does make companies often, as you just said, come out stronger and better for it.
In the last 3 years, we at Blackstone have spent a lot of time in what we call out-of-court restructures, so not going into bankruptcy. And I think when everybody realizes that something needs to be done, you can actually come together and get that done, and you don't need the safety of a bankruptcy court. The question is whether everybody realizes that.
Well, look at what's going on in Wisconsin. I mean, do you think all the sides realize what's going on?
I don't know, because there's a lot of hyperbole coming out of that state. I do think everyone recognizes that states need to balance their budgets and that they have extreme issues they're looking at and that a federal bailout is unlikely. So when everybody understands that, then usually people come together and figure out how to fix it. They often need professionals like my firm.
Are you getting involved at the municipal level?
We have helped in some municipal situations, definitely several situations. And they're different. They're not just, people look at Wisconsin, that is municipal. But if you look at any kind of revenue bond, so it could be a museum, it could be a sewer system, it could be a water system, it could be all sorts of things that are still municipal situations where the city can't afford, for instance, to bail out a sewer system or something like that. So I think you'll see municipal activity. How big, I don't know.
Okay. Let's go to some more corporate stories. And you were involved with Delta at one point. Talk to me about the airlines, because you and I were talking before we started this, and it does really still surprise me at how well the airlines weathered the financial downturn, the economic crisis. Right. Airlines are, just a much stronger state today?
They're much stronger. Stronger operationally is what I would say first. Sometimes I think it's funny, some of the people with the biggest troubles that get into trouble first often ride a storm out better because they've already gone and fixed everything that they needed to fix in a Chapter 11 or in a restructure. So the airlines figured out that they were not operating properly. They were not competing. This is the legacy side mostly. So this would be United and Delta and people like that. So they figured out they need to change the way they operate. They need to think of a JetBlue as a real competitor instead of just sort of a pain in their side. And so they changed everything. And what you see now when you fly is you see very full planes. And there's a reason for that, and it's not just economic. They've taken capacity out. They've changed the way that they utilize their planes. I gave you an example offline where Delta used to fly 777s from Atlanta down to Orlando daily, and to fill that kind of a plane to go that short of a distance is a hard thing to do, which means you drop your price and your plane is often not full. What Delta did is they took all those planes and sent them overseas, originally to Europe and now
much
further.
Much more lucrative.
Way more lucrative, and a better market, and so the planes fly not as frequently, they fly fuller. And so now when you get on a plane, as you know, you are waiting on lines, you're packed, you've got people on all sides.
To go on another flight.
Offering people to get off the plane, and that's a good thing for the airlines. They've also figured out how to raise fees in very specific ways.
Let's talk about the auto industry, because you guys were very involved with Ford and helping them deleverage their balance sheet. Is it a much healthier Ford today?
Ford's incredible. Alan Mulally took over the reins there and made such an amazing difference. And the difference he made, in my opinion, is he figured out how to make good cars. They make great cars. If you look at their advertisements today, they are beating Toyota and others in surveys, and they're good-looking cars. So that had to start, right?
It's all about product.
It's about product. Right. I'm not the one that makes the car. But what we saw was that if you could exchange some of the debt that was trading at a discount into other kinds of debt, or give them cash or something like that, that you could actually reduce the size of their balance sheet dramatically. And that's what we did, and that was what was accepted by the marketplace. So it was a $9 billion exchange, which just made a tremendous difference to what the company was already doing operationally.
Let me ask you though, because Ford was the only U.S. automaker that didn't get money from the government, didn't take any kind of bailout money. GM did. Some say that GM may be in a stronger position by having done that, gone through the bankruptcy process, and maybe put Ford at a disadvantage, and that maybe Ford should have been part of the bailout process. What do you think about that?
It's always a good question. I think Ford is a very strong company. I think that what you've seen is only the tip of the iceberg. for what they're doing. So I don't worry about that. Obviously, you'd rather have less debt than more debt. But I think from Ford's perspective, they didn't go through some of the gut-wrenching issues that a bankruptcy causes. So, they do have more debt. GM has debt, by the way. They're not debt-free.
But they still owe the U.S. taxpayers money. Let's not forget.
Although I think that's coming to an end. But I would take Ford's hand. I think it's a great company, great product, and I think if you have great product, you will always do well. If your balance sheet's out of whack, it's out of whack. But by what we did with them, I think it made a very big difference in their ability to continue. So I would expect. I have very positive about Ford and its prospects.
Good to hear. One last macro question I want to get to. As the government backs off all of their stimulus, as QE2 maybe, or QE3, or whenever it finally ends, does
Sounds
come
like
to
a
an
ship.
end. It does sound like a ship. Some have called it the Titanic, or likened it. When all of that goes away, do you think then we start to see maybe some of the problems within some of the companies that are out there?
I don't. Who knows? I think that's.
It's not masking, though. Maybe a little bit.
Well, I think it obviously put a lot of money into this.